All right, hello and welcome to Camel Finance. I'm your boy Camel, and we're back. We are back. For those of you that are wondering, I went fishing yesterday, and we had a right laugh actually. Really good time. Sea was absolutely thumping. It was very lumpy, quite difficult to fish. But the good news is, this is what I got for dinner. It's called a pouting for anyone that's interested, and it's a member of the cod family. I have no idea what they taste like, so I've never eaten one. But without further ado, let's get into some business, okay? Because CTAs are now short $25 billion of US equities, one of the largest short positions in the prior 8 years. So this has happened a few times over the past, I don't know how many months this is, 18 months, we'll just call it 18 months for the sake of argument. I've pointed to when we were this short and said every time that usually that is synonymous with local lows and bottoms, and I don't really foresee this time being any different. So in layman's terms, I think we possibly are going to be looking for at least some short-term relief from the stock market. And the QQQs, the Nasdaq, is oversold on the weekly time frame, comparable to the C19 lows. So again, the hard right edge of the screen, comparable to this, right? So to me at least, tells me to keep an open mind about seeing a potential relief bounce in the short term, potentially even a breakout. But again, I want to see that and let the market tell me that rather than just start to expect that this is what comes next. For now, I remain kind of neutral and leaning towards bearish until we can at least get a breakout. But I do at least expect some level of relief before we roll over. It's also pretty funny how often things like this work in markets, isn't it? We were talking about at the end of last week that stocks typically bottom on average around the 27th of October, and I was saying that it's really now or never for the stock market, and so far that seems to be playing out, right? This seems to be in play, so we'll see. Now that absolutely, of course, does not mean that we couldn't do this, okay? And that certainly is on the cards. Anything can happen, and I'm certainly not telling you that just because we got a little relief bounce yesterday, and maybe we will today as well, that means we're definitely doing this. But again, it's just pretty funny how, on average, October 27th shows up and stocks bottom and rally into the end of the year. And so far, we are following that template. Of course, tomorrow is the FOMC meeting, and we will get to finally find out whether or not we are going to see this rate pause confirmed. I'm sure we are, because whenever we see this number here above 85%, it's very seldom incorrect. So I'm pretty sure we're going to see a pause. And a lot of people were asking me, yeah, well, if we know we're going to see a pause, then isn't that already priced in, and won't it really be a non-event for markets? My argument is no, and the reason for that is it's not so much that this isn't priced in. The market will not be surprised by this. But after the Fed has spoken, after this has been confirmed, we have removed uncertainty from the market. Markets hate uncertainty, so by removing the uncertainty, they can begin to look forward again into the future, and thus, I think we have a better chance at seeing some upside and relief for the stock market. Over in the world of Bitcoin, Bitcoin continues to do Bitcoin things, and over in Switzerland, they're using the heat from Bitcoin miners to cook pastries. So I'm not going to play this whole clip, it's 2 minutes 18, but this is for real, okay? They really are mining Bitcoin and using the heat to cook pastry. So, I mean, that's pretty crazy to me at least. Nice chart from JT here. It points out, look, where exactly are we in this psychology of a market cycle chart, right? Otherwise known as the Wall Street cheat sheet. And you can see it down the bottom. Capitulation, anger, depression, disbelief. Well, according to this, we have surpassed anger. We have moved up out of depression and are now entering disbelief. And that actually kind of aligns with what I see on crypto Twitter, because even though the chart has undeniably, at least from my perspective, in fact, not even from my perspective, okay, it's malpractice to I look at this and say, no, this is just a counter trend rally. This is an uptrend, okay, ever since November of last year, okay? We had the FTX blow up, capitulation, the 4-year cycle low show up, right on time for a daily and weekly cycle low, and since then, we're making higher highs and higher lows. Yes, there was some sideways churn in here, but long-time viewers of the channel know it was malpractice to be bearish above 25k. And look at us go, okay? Breakout, retest, secondary retest, resumption, clearing the highs. So this thing is bullish. And yet, going back to this theme of disbelief, there are still an awful lot of people on Twitter, aren't there, telling us that this is the biggest bull trap ever and what comes next is a retest of the lows. There's a bunch of people calling for 10 and 12k still. Now, I would argue these people are either completely out of position, haven't got a position and have missed this entire move and are just begging and praying that they get one more chance to load up. Or likely, they are some sort of insiders or market makers, or they're employed by dishonest people just trying to herd people out of not entering Bitcoin or shorting Bitcoin or selling their positions here with the attempt to buy back lower. Okay, so anyway, the facts are the facts. That's an uptrend. And if you're going to say, yeah, well, maybe it's an uptrend within the context of a downtrend, at least wait for a trend line breakdown, right? At least wait for us to stop making higher highs and higher lows. Too long didn't read. Bitcoin, bullish as a son of a gun, probably going to continue to do so until people realize that this is not a sucker's rally. And in fact, a recovery is possible. From there, of course, you know what comes next. Great point here from Raoul Paul, okay? Crypto loves liquidity. Also a point I've been making over and over again on this channel, it's probably not the halving, okay? It's probably an entirely liquidity-driven instrument. Notice how in white here, Bitcoin year-over-year percent change, and in blue, global M2 year-over-year percent change. What do you notice? Because what I notice is Bitcoin follows the global M2 year-over-year percent change. Once we found that low, look, right around the FTX low at November of last year, liquidity in blue keeps climbing higher, and so does Bitcoin, okay? Makes perfect sense to me. And as Raoul points out here, look, it really loves global M2. This is when Bitcoin outperforms the NASDAQ and crypto becomes a supermassive black hole for liquidity. Similar chart, global M2 in blue and Bitcoin divided by the NASDAQ year over year. Look what you can see again. The GMI, Weekly Global Liquidity Index year over year, similar story, isn't it? Not even similar, exactly the same story. Total Liquidity Index, public and private, what do you see at the hard right edge? Continued upside. And it's the same deal for Fed net liquidity, isn't it? Look at the hard right edge. And as Raoul points out here, the sweet, gentle sound of cowbell can be heard in the not too far distance. More cowbell is just around the corner. How do we know that? Because this is the banking index. Banks are breaking down long-term support as they continue to go lower. They will need what? A bailout. What does a bailout come in the form of? It comes, of course, in the form of more cowbell, aka more money printing, more bailouts, more liquidity. The big boys know this, okay? The smart money knows this. Bitcoin whales have acquired over 30,000 Bitcoin worth around $1 billion in the last 5 days alone. So whilst retail is calling for 10K, whilst retail is identifying this as a a bull trap, whilst retail is saying they don't believe this pump and they're not going to FOMO in here because they're too experienced to buy a high and instead they want to buy low, well, whales disagree, whales keep bidding. And so moving into the charts, liking what I'm seeing out of the dollar here, okay? Still speaks to distribution, looking for that rollover. Hasn't done it yet, can certainly still go either way. But if I click onto the euro dollar, here we go, okay? Thinking about confirming that breakout retest resumption, okay? We had a fail on the first attempt, a breakout, a retest, now looking for that resumption. Get above this local high, and it is on. It is on for the euro to be bid. Of course, if the euro is bid and the euro makes up 57% of the dollar basket, what do we expect to see from the dollar? Finally, this blue squiggle of mine is going to come to fruition. Finally, the target down here at 95 comes back into play, and hopefully we can get this big risk on moment ignited for the stock market into the end of the year. Note the 10-year yield looks kind of heavy, doesn't it? We could certainly see a downward sloping resistance line break, okay, and this thing continue to move higher. But once Powell confirms this pause, okay, once the market realizes no one believes this tough talk, then we could well see this thing break down. Of course, if we do, this is going to be conducive to higher stock market and risk asset prices. My eye has just been drawn to XRP, noticing it's at 58 cents, so that's a pretty bullish looking chart. Ethereum is being discussed in the members only section, so it's not really fair to the members for me to cover that, although I know I'm getting a lot of people request me to do so. I'm afraid you're going to have to wait a little while. Bitcoin, still doing Bitcoin things, isn't it? I was talking about Bitcoin doing one of two things. I said I'd either want to see it retest the breakout level in green, okay, the high from back here, or I said I would love to see it chop around and do something like this before then it resumes to the upside. So far, we seem to be taking route 2, don't we? The second route. And as we continue to progress through this daily cycle, it's only reasonable to expect some kind of half cycle low around the 15th of November. So maybe something like this, a little grind up, quick drop down into that half cycle low. Does not have to be deep, okay? Does not have to be, we're not expecting the type of pull down that we would expect into a daily and a weekly cycle low. For a half cycle low, it could just be quite subtle. It's more of a structural thing, okay? Something like this, boom, half cycle low, and then out of half cycle low, we can move considerably higher before then we get a deeper correction into that daily and weekly cycle low, which, by the way, we're going to have to likely mark significantly higher up than where we are at the moment. So far, long and strong, continue to push. The crypto-related equities, how are they doing? So Coinbase, okay, well, we'll see. We'll see. MicroStrategy still looks great, doesn't it? Riot, not too bad, hanging around break even, and Marathon hopefully can start to get some resumption to the upside, particularly if the stock market can find relief. Check in on my oil short. Okay, not much to say about that. Still short and strong until we get a breakout of this down sloping red resistance line. Gold back below 2,000. Okay, well, that's fine as well. Probably in the neighborhood where we should see a cycle low show up in the not too distant future. This may well be the high for this daily cycle. Out of that daily cycle, we'll get an answer. I think we could probably get long out of that daily cycle as well. But of course, once that cycle low is found, sweep that low, and that tells us we're getting a big rollover. I do wonder if that's what's coming. Not because I'm not bullish gold, not because I don't think gold's going to do well, but because I think the stock market has a chance at recovering. I think the yields have a chance of coming off. And if all of that's going to happen, then why do we need to rush into gold to protect ourselves? Maybe we do, maybe we don't. Maybe this gets bid because yields come off and the dollar comes off. That's also possible. Silver kind of lagging still, isn't it? Well, we'll see. And the miners certainly lagging. So anyway, one day at a time as always. Nice candidate for a half cycle swing low here. But of course, the thing is, we have indeed got a failed cycle. So that tells us that if we've got a failed cycle, we should expect a rally up to here, followed by a rollover into that next daily cycle low. Now, I did say there's always a chance, particularly if the Fed and everything, all those stars align and the dollar comes off and yields come off. If all of that occurs at the same time this week, then we could well see something like this before we go again, and perhaps even have to mark this as a cycle inversion where the half cycle low is forced to a cycle low. Maybe that's coming, but as ever, one day at a time. For me, there's no trade here until we break out of this downward sloping resistance line. I'm sure you're going to see a bunch of people try to bottom pick the market. I'm sure you're going to see a bunch of people, but they were doing that here, weren't they? They were doing that all the way down here. Okay, they were doing that on the double bottom level. They were doing all of this, was people messaging me and saying, you missed it, you missed it. No. We wait for the breakout, okay? We wait for the breakout, unless, of course, the cycle low forms perfectly inside the timing window, which this one did not. But for now, playing patient, this is the NASDAQ, and it's a similar story, right? Get out here, break out, happy days, we get long. But if not, if we all the while we're in no man's land or potentially expecting further downside, then we're going to stay out of the way of this and focus on the stuff that we're focusing on. And here's the Dow Jones, okay? So again, breakout of here, that's a big time long from me, targeting all-time highs into the end of the year. But for now, this is simply breakdown, retest, looking for that resumption lower until the market proves us otherwise. I will say one thing that's kind of encouraging, the VIX kind of looking like it wants to roll over here. Now, hasn't done it yet, but get back below, what's that? That's probably around 17, we'll call it 18. Get back below 18 decisively on daily closing basis, and we should be able to see the stock market find some relief. So overall, not a lot of change. Still very, very bullish Bitcoin, still short oil, still waiting for the stock market to prove itself to me. Still pushing the crypto-related equities. Members-only setups look absolutely great. And bring on the week, right? By the end of this week, we're going to have our tell. The market will have spoken. We'll know which way we're going for sure by the end of this week. And so all we can do in the meantime is keep the powder dry, conserve ammunition, get ready to move only once the market has given me a technical reason to do so. And in the meantime, let's just enjoy life. I hope you're doing well in yours, and take care from me. Until next time, all the best. Cheers. Bye.